Good evening, everyone. Welcome to this webinar on ESS Small Business. We hope you have had a wonderful day, and today we're going to be talking to Paul Barnaby from PlanGuru. I just need to expand this a bit more. Who's going to talk to us about budgets and cash flow forecasts. Good evening, Paul. How are you?
I'm well indeed, Peter. Thank you very much.
Okay, thank you. Well, we'll just move into this webinar. Budgets and cash flow forecasts are very important for businesses because they guide where you're going. So you have a map to help you determine your journey in business. And what Paul's going to talk to you about this evening is how you can develop effective budgets and cash flow forecasts to assist you in your business. So Paul Barnaby's a chartered accountant. He's a business advisor. He has operated outsourced CFO services. He's conducted numerous workshops in Australia and New Zealand, and he's the integration consultant for the Asia Pacific region for PlanGuru. PlanGuru is a USA company with distribution around the globe, about 40 countries, I think, isn't it, Paul?
50, actually, Peter, yeah.
50 around the world, so quite a big organisation. So without any further ado, I'd like to welcome you, Paul. I'll just switch across the presenter, and that's now occurring. So over to you, Paul.
Thanks very much. Yeah, you should all be seeing my screen now, and the title of my presentation today is Budget, Forecast and Plan for More Profit. As Peter said in his introduction, I am a chartered accountant. I've had more years in the profession than I'm going to admit to. But I don't do traditional accounting anymore. I just specialise in this area: strategic planning, financial analysis, diagnostics, but particularly budgeting and forecasting. And I'm the regional integration consultant for PlanGuru, as Peter said. Later on in my presentation, I'm going to show you PlanGuru, which is a tool that we use in this process of budgeting, forecasting and cash flow. But first, I just want to take you through a few slides to talk about the process and why it is so important. And as you'll see from this slide, flying blind by reviewing historic financial statements is just not enough. Because to properly manage a business, we need to take the time to build budgets, do a performance review, and also reforecast the future, because this drives better decisions. And I'm going to suggest to you as small, medium-sized business operators that all of your important decisions should be made in the context of a budget or forecasting system or meeting, as it says in the slide, so that you can look at the pros and cons in a systematic way using real data. Because you're probably aware that large businesses do this. They all make important decisions in the context of a budgeting, forecasting and planning process. Many large companies have hundreds and sometimes even thousands of people directly involved in providing management with projections. So frequently they'll have an accounting department which will give information to the finance people. They will prepare the projections and then share that information with the decision makers. And I'm going to suggest to you that you can operate like the big companies, because I and my company can help you and your team implement these time-tested methods by assisting you with our background and experience. Because I or my company, we can be your outsourced finance department. You don't have to have it within your business. We're experts in building budgets and plans. We'll do the heavy work for you so that you can focus your time on the value-adding aspects of your business, not complicated model building. And because we're much more proficient than other firms, we can deliver this at a cost to you that our competition just can't achieve. So what we can do is to facilitate and optimize that performance review process so that you focus on what's most important. And as you'll see at the bottom of this slide, our experience over a broad group of clients over the years has given us a unique perspective that even if you were big enough to have an in-house team, they wouldn't be able to achieve. So let's just have a look for a moment as to what are the types of projects that we can mount for you, or indeed you can do yourselves if you've got the skills and the tools. So I'm starting with number one there, the typical operating budget and forecast. And this is where your budget is prepared at the beginning of the year. And this is not just sales, but costs and cost of production, cost of sales, what your balance sheet's likely to look like. And you prepare that at the beginning of the year, and then as the year unfolds, you'll be doing ongoing review. How are we going against that budget? And we'll do a rolling forecast, including cash, as part of that process. So you'll do a budget versus actual comparison. Number two there is strategic planning. And this is perhaps the bigger picture. This is where we define the vision for the future. And this in turn provides the budget with all of those high-level targets. The strategic plan is where we assess the risks and opportunities, helping you make better decisions and plans for your business. So frequently what you'll want to do is have a look at your sensitivities in your own particular business, maybe look at different scenarios, calculate your break-even, maybe even do a business valuation. Number three here, external estimate. We're all familiar with this when the bank manager rings up and says, I'm reviewing your facilities, can you please get somebody in your organisation or your accountant to let us have the next 3 years' financial performance. And while this is typically lenders, sometimes it can be your partners in business or the board of directors or maybe a potential investor. And number four is where, and you've been faced with this before I'm sure, where you're looking at a large contract or a particular investment or an acquisition, and you need to evaluate the outcomes of those decisions in an organised way. So you need to be able to quickly build intelligent financial projections. And this is where I come in my company and PlanGuru. Because this process puts you on what I call the repeating cycle of success. And this little graphic here, you can see the cycle of success, and there's three different colours here. Four, starting with the strategic planning process, which is typically performed in the middle of the current financial year, looking at the next financial year. So you'll be, or even further, you'll be looking at what you think your plan for the future is. After that, and before the beginning of the financial year, that's the red line here, is the budgeting process. This is where, in accordance with the parameters we've set up in the strategic plan, we actually put the budget for next year and maybe even following years in place. And in the green circle you'll see here is the performance review. This is where we continually review performance against those budgets, have a look at variances, question our decisions, and make new ones. And then the innermost circle, the blue line, is that rolling forecast. And this is where we recommend you get an accurate and tactical view of where your business is headed. Now I can hear you thinking this is all very difficult. How do we do it? And this is where PlanGuru comes in, which is the tool to help you do that. Because it's the process, not just the end product, that adds value. Everybody's looking for a tool that'll enable us to instantly produce information to help us with decisions. But that's dreaming, that's a fantasy. In any business, there's only one place to start if you're serious about making better decisions, and that's starting the year with a line-by-line budget process, doing those performance reviews, comparing budget versus actual, and the monthly rolling forecasts. And of course, this will take some time. It's not instantaneous, but as time goes on, you'll find that your business will start making better decisions and benefiting from those decisions. And I talk about the line-by-line budgeting exercise. You need to look at each of the opportunities that you've got, each of your sales, each of your products, each of your services. You need to make targeted adjustments to reach the goals that you might have set up. And one of the benefits of this process is that the decision makers, you and your team, are challenged to go on the record, which in turn stimulates a better understanding of the business. So you need to do things like gross growth rates, say 0.5% every month. You need to be looking at your collection and your customers' receivables, 22 days that they're taking to pay. What would be the outcome if you increased that collection rate? And then after we've set those budgets, we need to go on and compare what happened to what we thought was going to happen. So we need, as you can see in the bottom of the slide, need to compare budget with actual. Our sales were ahead of budget. That's wonderful. Were our cost of sales ahead of budget? Were our expenses online? What's the trend of our revenue? How are we going budget versus actual year to date in terms of total revenue? These are all of the things that are just so vitally important. And that monthly rolling forecast that I mentioned, this is where we replace the actual results in the months that have actually elapsed, and the remaining periods are then reforecast. So if you can have a look down here, you can see what our actual results were for July, August and September. What is our forecast for the rest of the year? What is our updated expectation? Not only of sales and cost of sales, but of cash flow as well. And the other thing I hear you saying, we can't always get it right. And of course you're correct. We can't predict the future. And really, that doesn't matter. What does matter is that we've, in the forecasting process, actually set a baseline. If the assumptions that we've made in setting that baseline don't actually pan out in reality, we can calculate the variance, reapply that to the baseline, and in this way, we'll always have a good idea of where we stand. Because it's about creating a direction to working towards that targeted profit, and different people do different things. For example, you might participate in a trade fair each year. You may spend $2,000 at the printer, but if you shop around, you can save $800. That goes towards that targeted profit. Okay, and getting towards the end of my slides, and I am going to show you the tool very shortly. If you do go on and do a strategic plan, this gives you 3 vital roles or outcomes. Firstly, it sets the direction for the future. You know where it is that you're heading, and the operating budget is aligned with that. Secondly, it enables you to do what ifs. What if we got that new contract? What if our sales didn't eventuate as we thought? What if we added extra staff to get extra sales? What would be the outcome of that? And thirdly, a strategic plan always serves as a personal review for you as business owners. So you can look at your business in the same way as you look at your super or your share portfolio. When should you retire? When do you want to retire? Should you sell? So frequently we can help you with a personal cash flow analysis or a business valuation. So I'm about to show you PlanGuru, which is the tool that I use, and you can use yourselves because it's not a difficult tool. You're able to download a free trial. There are special pricing for clients of ESS, a small business, and there is a very good learning centre. If you've got any questions, please feel free to phone me, but I'm now going to show you an actual budget in place. Okay, and what I'm going to show you today is at a top level. I have been saying during the presentation that normally we do this line by line, but just so that we can keep it nice and simple today, I'm going to show you just a top level budget and cash flow. So you can see here in the screen, I have set out a new business, firstly starting in July, and I have set up the sales budget simply by saying that I expect that we'll get $500,000 in annual sales, and I've asked PlanGuru to allocate that on a monthly basis. I've come in here and said that my cost of sales for this product that I'm going to sell runs at around 65% of the sales value. So I can set that as a percentage of other lines. You'll see how the simple logic is built into PlanGuru. Again, I repeat, we would normally budget our overheads on a line-by-line basis. What I've done here is simply said, I expect my overhead expenses to be $5,000 a month. And that's allocated that across the year. So you can see here I've got an income before tax of around $115,000 for this business before tax, expecting that to accrue at around $9,500 a month. I've set up a balance sheet for this business, and again, if I had historic data, I can import that. I haven't for this one. I've just set it up, and I've nominated that we've got things like accounts receivable, which we're budgeting to collect at 45 days based on our sales numbers. So PlanGuru calculates the cash flow, calculates the balance that will be showing in your accounts for accounts receivable based on a 45-day collection. I've set it up to show that we're calculating inventory. And here again, inventory is simply calculated based on having 70 days stock on hand. I've budgeted for GST. PlanGuru calculates GST automatically. Even though it's sold in 50-odd countries around the world, as Peter was saying at the outset, it is programmed for GST. I can set up things like a bank overdraft, which I've got here with a limit of $60,000, and I can also ask PlanGuru to ensure that I've always got $1,000 minimum cash balance. I have also allowed for accounts payable, which are the terms from my own suppliers, and this has been done based on a 40-day cycle of payment, based on my purchases, in other words, cost of sales, and my overheads. So as you can see, not difficult stuff. No complicated spreadsheets, just nice, simple stuff. If I have a look at the cash flow report now, and while you might think this is a bit complicated, what it's really saying is that the operating revenues were $41,000 a month. We do have accounts receivable, so we're not going to get all of that in all months, so that there it calculates the cash coming in from customers. Picks up the operating expenses and adjusts for items that are going to affect the cash flow of that. So you can see in my first month here I've got a negative cash flow of $63,000, but I do have a bank overdraft of $60,000, so it's picked that up. So I've just got a small deficit of $3,197 to deal with. And that's what turns up in the balance sheet. So there's the cash flow report. If I have a look at the balance sheet, you can see that negative sitting there. And this is where we can use the power of a tool like PlanGuru. Let's say the bank's not going to allow an overdraft of a total of 63. They're going to stop it at 60,000. So we cannot have that cash deficit. So how am I going to manage that? I can manage that by saying in my inventory, I was showing having 70 days stock on hand. Well, what about in this business? I started the year by saying, let's make that only 65 days for the first month. Sorry, 60 days, might be more conservative, so 60 days for the first month, taking it up to 65 in the second month, and then taking us up to 70. Watch what happens with this cash deficit when I click OK. It's not only disappeared, but we're now showing that we've got $1,000 cash and cash equivalent. And our bank overdraft is reached here, our limit's reached here, but from there on in, it starts reducing as the cash flow becomes positive, and so our cash and cash equivalent starts to grow over here in March, April, May, and June, etc. So, If you have any questions on this, please make certain you let us know. I'm very happy to explain, but I just thought I'd show you this model. So that's how the budget is set up. We can put in actuals and compare those, and I'm going to show you that in a separate file because I like to keep the demonstration files separate, both before and after the budget is approved. I'll just open the other file. Won't be a tick. You might be thinking about some questions that you've got as I open this file. And here we go. You'll now notice I've got actuals in here. And up the top here, I can actually look at the budget. There was my original budget, which you'll remember was 500,000 of revenue for the year and about 115,000 profit. So same data, but now I've actually got actuals in. So I've got the actual performance in for July, August and September, and you can see those numbers there. I've brought in the actual balance sheet for July, August and September there. So what I'm able to do now is that review. I can review budget versus actual, and this is the very important part of the process that I was describing earlier. So let's say I might want to ask PlanGuru for the results for September, but I'd like not only the month, I'd like the year to date as well. I want to have a look at the revenue statement, and I want a percentage variance as well as a dollar variance. Click OK, and PlanGuru will build that income statement. It will go and get the budget for September on a line-by-line basis, compare it with the actuals and give us a variance. It'll do the same for the year to date, and it'll portray it in the report with a dollar variance and a percentage variance. So you can see there that my budget for sales for September was 41,667. We actually attained 41, so we were just back by 667 or 1.6%. Cost of sales was very close to budget. Operating expenses, our overheads, were just slightly ahead of budget. So overall, my actual profit for the month of September was 8,900 compared to 9,500. But year to date, my budget is 28,750 odd. My actual is 29,200. So I'm ahead. And that variance there is shown in, as I said, by both dollars and percentage terms. And we can do that variance reporting inside PlanGuru for the revenue statement as I did it there, but we can also do it for the balance sheet, and we can do it for the cash flow. So you can see there's my actual results, but if I want, I can come up here and say, what's the forecast now? So the forecast is looking like I've got a deficit of cash looming in October and November, but then that drops away into September, and I can have a look at that by viewing my balance sheet, and you can see those negative cash ones there. What's causing that? And here is where I can do what ifs and make changes to my remaining budget, so as you can see, I can get that forecast on a rolling basis. Okay, so that's the tool PlanGuru. Very simple. Set up your budget, which you can always review at a later stage. So you can see the budget there, which was 500,000 of sales, 115,000 of profit. I can look at the actuals. How am I going to date? July, August and September, I'm already at 29,200. I can look at the forecast, which of course is a mixture of the actual and the remaining budget. So it looks like we're going to come, in this case, pretty close to our initial forecast sales and pretty close to our forecast net income. So there you go, folks. That's the tool. As I mentioned before, I am the regional integration consultant for PlanGuru, which means that I support the sales process in Australia and New Zealand. I'm available on the phone. We'll make certain that you have all those contact details. And in terms of PlanGuru, you can download a 30-day trial version. It is the full version that you're looking at here. Its only restriction is that you cannot print or export. So there we go, Peter. Back to you. That's my little spiel for the day. As I said, if there are any questions, please sure that they're directed either to Peter or directly to me.
Okay, thanks very much, Paul. If you have any questions, can you please send them through to us? Just type them and put them, raise your hand and send them through, and we'll bring them to Paul's attention. If you think of some questions later on and you would like to raise them with us, please send them through to us by email to peter@essbiztools.com.au. So just to finish off a couple of the things here today, there are some more upcoming webinars. On Tuesday, the 6th of October, we have a presentation on legal matters by Matthew Karakalakis from AMK Law in Melbourne, and he will take you through some legal issues affecting small, medium enterprises. On Wednesday, we have marketing strategies for SMEs presented by Robin Simpson from Market Smartly. And on Thursday, the 8th of October, we have Introduction to Benchmarking presented by Vince Keogh from benchmarking.com.au. So thank you very much for your participation in this webinar. Just remember that the ESS Small Business website contains free and paid articles. There is a very good offer from PlanGuru included in our material. All you need to do is to download the free material and then link onto the landing page, and it will give you full details of what's on offer. So, Paul, once again, thank you for participating today, and
no problem.
Look forward to talking to you at a future date. Thank you. Goodbye.